Hello everybody, welcome back to Financial Trading Basics. So this videos, at least from here, at least any of the videos I say explicitly, will be kind of in tandem with our great scholar, the journalist, Mr. Sorkin, Andy Ross jerking off, I mean Sorkin. Anyway, but most of the structured kind of like conceptual big ideas from economics or finance will kind of be addressed more in the either the book club episodes or actual derivation, but like liquidity and solvency, those have well defined applications or direct like connections to the logical derivations we're doing in science class. And so the actual economics, I'll be responding to sentiment, but it won't be as centralized and as direct as other things because well, there's a lot of pieces in economy and or you can't prove what isn't true. And so this will be a lot more. I'm trying to make this as I mean, it is going to be the same logical quality as my scientific derivation, but it's not going to be as centralized. And so trying to apply any overarching ideas, but things we'll discuss again like solvency, liquidity, volume, all of those are well defined in complete generality in economics, but I don't know how to tie them all together all of the time. And so trying to create a centralized overview of how economy is going to progress. And again, the big things to me are the evolution of population, which will still, to me, increase. It will certainly plateau at some point, but what does that plateauing look like and when? I truly just really have no good idea. And then policy congruence with actual demand, right? Demand is what drives absolutely literally everything in the economy. The population is where the demand comes from. And again, see, this is what I'm saying is like trying to make this big centralized structure. I can't. And so I'll just be responding to certain things with definitive logical certainty and then responding more kind of like any other economics person, professor, commentator, trader, so on and so forth. And so that's what we're doing here. We'll be discussing in this episode my trades and kind of just my overarching thing, because trading and economics at the same time, but I really want to focus more on economics, but I do think we have a good kind of development today. And so what I really think is the most tradable event is, and really what I think is everyone's seeing all of the time, is just progression of sentiment and momentum in an economic sense, right? If you've ever traded a stock, you know what it's like to have momentum and not have momentum. Like right now, we're looking at in the background American Eagle. I'll go over the actual trades here in a second. But point being is, to me, most tradable events is just some portion. Well, it's certainly all reflective of sentiment. And sentiment evolves, where you have people at every different point of their lifetime with different, again, financial goals, but you're all trading the same things. And so that kind of like sentiment's kind of limited by, again, a given market, right? We're looking specifically at the United States stock market, but there's a lot of other demand in other places. And so the biggest tradable event for me, what you're really looking at is the driver population. Population is evolving, it will plateau. That generates demand. You have certain necessities, needs people are going to buy, and that's what also drives crime, right? When you don't have your necessities met, you're more inclined to go do anything you need to do. And so, again, how will, the limitation, to me, all criminal activity is a direct response to economic evolution. And so there's huge swaths of analysis that need to be done throughout, but just responding, again, sticking with something that we can talk about definitively, starting with specific trades and then trying to generalize to given principles. And then overall, after population and demand, you really have liquidity, right? What is liquidity? The ability to access currency, right? If I have a book or I have my headphones or I have my cell phone or whatever object and somebody wants to buy it, then you have the supply chain, which is, transportation, and then the ability to, because we have these different sections of different markets, right? England, France, Germany, wherever, Japan, Botswana, right? So it's the same good, and demand is still demand, but how do we get those goods to those places? Are those goods already available in those places? What are the policies, restrictions, or facilitations within these different countries? All obviously go into what's the price, how much money you can make, and then all of these different things develop. As always, we have our live-in scholar, Gus. But I think my dad got home. But point being is I'm not going to sit here and try to derive this whole logical structure the whole time. I'm just going to try to stay on specifics. And so, but really overall, what I think we're watching evolution is, again, currency, how we kind of, represent these different goods. And then we have disparity, arbitrage, right? If you can buy one thing over here for $10 and then sell it over here for $12, you're always going to try to do that. But then transportation and technology increasing is going to limit that ability. It's going to moderate in a good way. And so again, really the population evolution with demand and policy synchronizing is really kind of like what you're watching overall. And with that being said, we're just going to focus on the actual specifics, especially in these videos. And so just kind of going over my trades, we'll start off with and so when I'm talking about this momentum, like that is what I see as you're just trying to find the different, nobody wants to be a contrarian investor. You can't, because of what liquidity is and because of what volume is, right? The only way to make money is if you buy or sell something before somebody else wants to buy or sell that thing. And so specifically to stocks, to, digits and stuff you're clicking on a screen, you're not actually transporting the goods. Which if you trade Forex and you actually have to take delivery of these different commodities, that's a real thing. Like if you're just out there watching on, with 10 grand in an account or something, be careful. You might actually have to take delivery if you're trading futures and stuff like that. But point being is the sentiment evolution, again, of different people, like in the same breath, I'll turn on CNBC and people will be like, markets behave irrationally, and that's already priced in. And so people will say things that are directly logically contradictory, like literally in the same breath, but both of them have like legitimate reason to be said. And so just trying to like separate anything that's possible. But point being, as I keep saying, the overall maturity of investors is very, very low. Just meaning people looking at screens and understanding what is going on, saying this, correlation and causation, and the Fed interest rates correlated specifically to the U.S. equity stock markets increasing. It's like it's one of those that they have that assertion specifically is there's certain what I would say it is what it is economically, where it's just why does a company trade at X amount of forward earnings? To me, is extremely arbitrary, but it is. And so it's like if it's 10 PE seems to be the most and something else is not 10 PE, it's just a difference, right? It's a difference you can identify about whatever the baseline is. And so there'll be sections where, again, definitive logical certainty, it's not going to be centralized. Certain things that are definitely inconsistent, such as, the markets are irrational. I think that's priced in. It's like, what? And then back to the trades. So again, like I said, I can't centralize it all at one time. But the point being, where was I at? We'll just get to the trades. And so, momentum. So what I am doing to kind of track this, or the biggest within that, the evolution of sentiment, your different ages and different stuff, your money managers, pretty low in knowing what's going on, like knowing for sure this event causes this reaction in the stock market. And we'll just stick specifically to U.S. stocks. Is it just very weak? Like I haven't seen this happen for this reason. Here's the data that definitively asserts or shows that why that occurred. And so to me, I'm over here for a lot of things where it's just like, it could be that, it could not be that, it could be kind of that. I don't really know. And so I want to kind of track what I think is the most tradable event is overblown when you have everyone's forward looking. I think that forward looking gets extended way too much. And I think that happens really consistently because people have to mature. How many people are really sitting there clicking buttons, right, that have made their entire wealth or like know what was going on financially, right? If you took the biggest example, people would have to say Warren Buffett. meaning investors taking a stock account. I think he had like 10 grand, trading it up from the 80s to billions of net worth, not founding the companies, simply sitting here watching this momentum sentiment relationship between dollar bills and human action, and actually made money trading. Would be, you would have to say Warren Buffett. But point being is, there's like one or two, and if you're in the finance world, maybe you can name 10 or 20. But there's not that many, and every single person interacts with money. Every single person is interacting with the sentiment of economic development, buying a house, interest rates on a personal level, on a Federal Reserve level. I'm still kind of neutral. I don't know what's really the correlation is, how strong that correlation is. Because then again, it's very clear to me, like, sentiment is sentiment. All things kind of trade together, right? If you have an up day on stocks, most stocks are trading in the same directions. If you have a lot of volume, if you have a lot of excitement, there's a lot of volatility. It doesn't really say up or down. It just says, and so that evolution of emotion playing out and reflecting in these different charts that we're looking at, we can just follow it. And so how I'm following this, again, where we see, because we've traded a lot, and if you watch my previous videos, companies where it's like penny stocks, which again, there's nothing wrong with that. I like trading that, but you have a company that has real fundamentals, that it's not like the whole company is going to make it or break it on an FDA approval or some small term hype. But to me, like I said, I think hype plays out in everything. And so because population is going to increase overall, again, long term, if I had to sit here and say I'm going to plan for 50 years, I would pretty much be doing your average buying the S&P 500. And I want to go more in depth. I'll do a whole other video, and it'll be a whole series responding to this book, and trying to continue on the ideas that we've already brought forth. But I'll talk about why I think the actual indices and what I think of those. But point being is, right here we're looking at SanDisk Corp. And so if you have 4 brain cells ever, you can look at this chart and say, wow, this is probably not sustainable. Right? We're going from last April. And where's last April? But I think this is last April, right here, about $27 up to $600, currently at $669. Nice, classic. That's a great price. Like literally flat, nice, classic. Anyway, but point being is we have SanDisk. We have this memory chip, right? We have definitive companies with legitimate infrastructure. We have legitimate demand. And I think what anybody with 4 brain cells would say is, it's this trajectory is not sustainable. But then how do you trade it? How do you make some sort of generalization about what's going on from the sentiment and make some sort of economic analysis, not just I made money, I didn't make money, with these trades? And so on a trader standpoint, I always like to play the downfall of this, because to me it's like when, right? Okay, so your average, again, you can see my account stuff. All of this is pretty much 580 is just sitting in treasury bonds. As long as that gets me above $1,000 a month, I'm not moving. I'm sitting here. So I'm not really in the game. But what I did was I took, and pretty much at the same time, I shorted 1 share of SanDisk, and then I bought 1 share of Micron. And so Micron, I'm a short bias. I am a long-term bull on the market, but in a level of vagary that is so, like, time frame. There's going to be a lot of jiggles in 5, 10, 15 years, in 5, 10, 15 days. And so I'm trying to, again, like, hone in on what these pivot points of this momentum changing. And so point being is I bought 1 share of Micron and I shorted 1 share of SanDisk to try to follow this trade. Overall, again, I'm a bull on the market in the medium long term, but that is at a level of generality that's not an actionable event. I do, like I said, I'm trading this as I actually would, just with the actual, obviously the bare minimum to enter and exit. And so short term, like medium term, I see this trade peaking within the next, I think, in March. Like, that's kind of my time frame, is when this bubble, I don't even want to use the B word, but this endless appreciation of stocks. Like, when you're looking at a chart like this, it's just like, and everyone's doing the same thing. Nobody's not looking at this shit like, okay, this thing is going to come down when, I don't even want to say why, but when and how. is kind of what I'm trying to follow economically. Because to me, this is no different, right? When we have, back to the generality, you have a sustained company, real infrastructure, real demand. How does that equilibrate, jiggle back and forth between, and then it is what it is just, we're kind of assuming that this forward earnings, or PE of this, is kind of what everything's going to trade at, because I don't fucking know, but it is what it is. And so, point being is, as a short trader, again, I'm trading this legitimately. Obviously not a share size that's going to matter, but if this trade continues to appreciate, one, Micron is a company that I would long for, again, the medium term, past this, next 3 months, or what I see, this retracement of momentum of appreciation within the memory space of technology. But if it does appreciate to the upside, I'll be exposed again. I'm trying to trade this effectively flat. I'm trying to make money, but I'm trying to follow the development. And so, but Micron pays a dividend, SanDisk does not, which as an actual trader, that's a big relevant thing. And so I'm short the position without this is back to the chart you're looking at is SanDisk Corp. So this is the one without the dividend. So I could hold this short for pretty much indefinitely. Obviously, I don't want to lose any money, but I'll hold this indefinitely. I mean, I'll probably put like a stop at like $3,000 just in case something retarded happens. But point being is just following the momentum. And obviously, like anybody else, I don't know what's going to happen. But to me, I just look at, okay, what is something equivalent to this? What is Moderna? Let's see. This is why I can't be. I'm sloppy. But to me, what is happening, the momentum playing out right now in the memory AI space, is the same thing that happened in Moderna. And so, or these different, the big pharmaceutical companies. Why can I not find the freaking stock ticker right now? mRNA. Okay, so but what happened throughout the pandemic is just, you have this tremendous demand, you overshoot the demand, you're going to overshoot the demand. You're going to see that in speculative markets, obviously. Is this Moderna? Yeah. Okay, well, it's 2026, Brad. Oh my goodness, that was a long time ago. And so, but the point being is this is what I see happening in memory right now. And I don't see this stop happening because of this overall maturity, right? People have to grow up. And when you have like one Warren Buffett, that's a good indication that a lot of people aren't sitting here making fortunes just trading. And it's there. The volume, the liquidity, the ability to literally sit on your computer, click a button, and appreciate, profound wealth is objectively right there. And so this is what I see as the most tradable event. Everyone for as long as time has been going on, or as long as markets have been around, you want to buy the thing that's going to appreciate before this happens, obviously. But then again, how long are you going to sit in these doldrums, right? How long are you going to go watch Shark Tank, go watch any investor, go talk to any investor? What entrepreneur comes in there and is like, oh yeah, dude, I'm going to have the company that just grows at like a cool 7%. We're never going to have a dividend. We're going to piss through your money and then try to raise some money in about 18 months at a higher valuation and call ourselves a company, right? Like, who really comes into an investor pitch and says like realistic shit? Is like nobody. And so, and that's, I don't want to say that's good or bad, but it's just realistic, meaning from a trader economic, more general perspective, is you kind of wait for the move to start happening. And then you definitely want to play but again, if the momentum lasts, 3 months, right? That's for these more mid-cap, bigger cap stocks, 3 months to 3 years, right? And we're at this point of 3 years of appreciation, not for Moderna going to S&P 500. But so we're at this 3-year period of appreciation. So overall, I'm looking for another one of these type of deals. And again, this was more of like a policy tariff thingamabob. But it's like the amount of unstable equilibrium events that can send some fucking shit like this happening is a lot. There's genuine, obvious supply chain disruptions. And so for an overall tradable event, I see as the most obvious thing is the retracement of this overshooting. And obviously you have to have a margin account to short these things. Um, but I'm not, like I said, I showed you before, I'm not actually really trading anything with any sort of volume, but I would not trade on margin. And to short things, you have to have a margin account. But again, my total, the one actual position I have that's kind of open for making money is a short on American Eagle. Again, just the trying to fade seasonality. There's no real insight to that. But point being is I'm not trading any of these big momentum things like on a personal financial level for my money. But if I was, it would just be a small fraction. But there's like if I wanted to play SanDisk blow, if I thought this was the absolute top, which I don't, I just think this is probably pretty close. This could easily run to $1,000, and I wouldn't bat an eye. But like I said, I think March is my perspective of when this stuff seriously starts to like. And then Brad, why March? I think about that's kind of when it feels like. I don't know. But that's the whole point. Is that's what I'm exploring with my trying to develop into my economic thesis. Is like what the fuck's going on, and what can we say definitively about what is going on. And so that's my overall approach to this. And again, the actual stocks, SanDisk, has a bigger appreciation and it has no dividend. I see Micron and SanDisk as effectively the same trade. Could it decouple? Could it not be correlated? Sure. But again, I have one share short here and one share long at Micron to follow this development. And I see this as this is going to be Moderna. This is going to be what we're looking at. The 10-year chart for Moderna is going to be these memory chips. Because they're real companies. It's not like Moderna's not a real company still producing stuff. It's just you see this extreme appreciation, and I think it is the most tradable event. Is this coming down of these big appreciations? And I don't see that as changing because again, there's like one Warren Buffett, and there's how many people on these different stock forums like saying to the moon, not to the moon. And I don't say that's right or wrong. It's just people grow up, and that never changes. Kids are always kids. Age is just a number. Financial maturity is not even like present in our society. And so that's how I'm kind of like following the Moderna thing. Or not the Moderna, but just like the momentum development. And that's, again, what I think is the big tradable event and what everybody's looking at, right? I don't think anyone could debate. Everyone just kind of at a different place of this sentiment. Again, you have, for any one person, right, for any buyer, there's always a seller. And the reasons as to why is obviously like life things, way more so than, right, nobody responsible, and I definitely say again, for every one profoundly irresponsible person, there is 1,000 more responsible people. But just who's clicking the buttons. So that's what I'm getting to the kind of thinking, the intuition in this book. Because obviously I've read like the first 50 pages, and it's do rich arrogant people get over leveraged and that causes bad things? Yeah. And so I'll respond specifically to the book and the book club episodes. But right, when I'm talking about on a personal level, like if I were to short SanDisk, like one of these things where it could, I think you could manage risk properly. I haven't run numbers. I'm not going to trade it because I just have no personal desire to. Because the risk reward, right, what I could lose, I'm sitting over here at S-Gov big chillin', versus even if I made $100,000, it's not going to change my day-to-day life at all, zero. And so the risk reward for me without constitutional rights is kind of not there to trade anything. But point being is, right, I don't see why, like SanDisk right now, because this could be the top, right? This could be a double top right here that surprised me zero. I mean, it's at 1,400% appreciation since last April. But how I would trade this if I was actually trading this to try to make money and not follow the momentum would be anytime, again, this big appreciation here, to me, is an actual tradable event. Anytime somebody beats earnings and you have a big post-market appreciation without the confirmation of volume, just meaning the market being open, right? It always, I don't say always, but 9 out of 10 times, these are trades I do take where you're trading the down pressure. But I'm not going to all of the time sit here and comment on these little technical things, because if you've followed stocks up until this point, or I'm assuming most people have a substantial exposure to technical analysis, which is really just watching momentum in the past. But point being is that this would not surprise me if this is the top. And so I would be shorting the actual shares. And then if I had to hedge that, like I said, I have one share where I'll probably throw a stop loss literally at like $3,000, just to avoid if any carnival shit happens. But to me, this is already carnival shit. And so, but I would have like, again, a zero, like throw on a call option at like $2,000 for SanDisk on Friday. And so you could always like hedge any sort of profound extreme of movement with an option. And so I would short the actual shares, and then I would hedge the risk with options. Because if you're buying, something out of the money that's already appreciated 1,400%, the premiums on that shit has to be like non-existent. Let's see. I'm not going to convince myself into trading anything big. That's not occurring. But you could put, these there's call options. And so I would have to look through the chains. What strikes are we looking at? So like 1,000. That's still $19. So that's still not bad. But again, point being is I think you could very reasonably, if you were trading to make money, and there's no point in my life I'll ever actually have to trade to make money anymore. But to short the actual shares and then to do hedging with the options would make a tremendous amount of sense to me. And you would always just, again, weight the risk on that zero. Like, again, today is Monday, February 2nd, 2026. I would be on Friday. It would be like the 6th or the 7th, the 6th or the 7th, whatever it is. But you could, because if you had this extreme appreciation, you would be hedged with the option. And the premiums, again, if you're closer to the actual expiration dates, would be obvious. I just don't want to go through the option chain right now. Would be a lot smaller. And so that's, if I was trading to make money, that is what I'd be doing, and I would be doing it with this approach. SanDisk specifically without a dividend, or if there's another one out there. But we'll see, and we'll follow this along as we're reading this book, and we'll follow the different price actions. So that is what I'm doing big. Like, that's my economic following prospectus. Other little things, again, so this one makes me mad. The ATAI and the DFTX, this used to be MNMD, name change. So I had 950 shares of here. And so this is what stock trading looks like when you're the victim of crime. And so this is literally the stock. I said, there's a video. I said, I'll let you know when this one's $1 million. So this one would have went profitable from that position entry. I think it totally would have went profitable right around $15. And then I had like 15 grand on there, and I closed about $5,000 of losses down in here because it's still appreciated. And so I still have never been able to actually execute trades that I wanted to. And so when you have something that's been sitting in the doldrums for a while and appreciates 100%, and you try to preserve some of that capital, and then it just continues on, it's like, oh, cool, sweet, I missed the thing that I tried to invest in, but this is America where the laws don't really fucking exist. And so this one kind of pisses me off just because, again, $5,000 doesn't swing my life one way or the other. Obviously, I don't want to lose any money, but having to manage money as the victim of crime is not a trading prospectus. And so this would have been substantial, like, obviously not at the million, because this reverse split. Reverse split. And so, but it would have been overall profitable into, like, I lost about $5,000 closing so like overall from total trading this, I would say I'm down about $3,000, specifically because I had to close these positions down in here to preserve some money when I sold my house back at the end of last year. All of this action, everything I've documented in the past 8 years, is because I do not have the ability to start a company, to get a job, to have access to my credentials, and I have lost my whole life to it. So this is fun to see. And so that's what I have here. Again, so when I was saying before, like, again, you want to have the positions before these big appreciations happen. Absolutely 100 million %. This quote unquote alternative medicine is the next one. It has the foundational science, and it just needs the policy to align to demand. And at this point, again, people don't even know what they want, but what is called psychedelic medicine or cannabis medicine, natural remedies, they're all extremely, prescribed cannabis oil yesterday. That's a legal proceeding that I'm done. That's done. That's me putting my foot down legally. You guys get fucked. Um, but the this ATAI, the DFTX, which company, and I don't know. I'm assuming it's going to be the ones, as long as they can stay solvent, as long as they can stay alive until the policy aligns with what will be tremendous demand and what is certainly 1,000,000% proven science. So that's a handout, and it's just I can't manage my money because of crime. So that's fun. But that's my other thing. Again, I have that. SPYI, just these little incomes. I told you I dumped the weekly ones. That was this WPay and this ULTY. Glad I got out of those. I've been trading American Eagle pretty well. And so I'm currently down on that one because this is since the last time I made a video here, this is a new position. So I closed the other one right around 23.76. Again, just a quick trading note, after you have like 3 or 4 days of depreciation, and my entry wasn't that great. My entry was like right around 24.89-ish. So close to 25, but point being is you have 3 days where you go from not profitable to profitable, and the profitability was like $300 less the dividend, which was 25. So I closed about $250, $275 of profit. And so again, that's what kind of, I was going for like $400 of income from the weekly, and so that kind of hit my trading range. But again, on the actual technical movements, it made sense to close the trade. And so I re-entered this one today. Obviously, we've appreciated a little bit, minus 113. But again, it's the same trade. It's just technically, it hits this adaptive moving average, exponential. It doesn't really matter. But technically, this would be a good place to re-short. I was a little quick on it, but I think this is, again, American Eagle, I'm trading the seasonality. Okay, we went through the holiday season. Now we come back out. Less volume, less excitement overall. And so, whereas in the momentum ones, you're looking at the peak of the excitement. And so, could be wrong, but again, this is the only thing I kind of have out there to try to make money. The other two, SanDisk and Micron, are to follow the economic development. And so then I do have some Joby. I just like this one. I like the name. I like flying cars, so I bought some Joby, as I said before. But so I got, and I'll add a little. I'll put maybe $1,000, $2,000 on here. And so that's really the only things I have. I have this stupid Jemmy from the Winklevosses. Again, this is one of those things where you just bought. I don't even know what this is just me being sloppy. And then QQI, just the income on the QQQ, and that's it. And then SGov, like I said, I'm not really trading to make money, but that is what I want to follow. And so I was going to comment a little bit on the trades, I guess American Eagle, because I did trade this to the upside when I already said that. We already talked about that when it beat there's nothing else I really want to say in terms of this little technical stuff, because I'm assuming if you're watching these videos, you've already done enough of the technical analysis where you kind of know all of this stuff is just trailing indication. Yeah, everybody looks at it, but it's like, and so, but actually I want to take that back, because like when I hear people on CNBC, right, they're not even talking about it's still, because it always makes sense, right? Another one of those overarching theorems you can say, it always makes sense to buy something that you think is going to go up, and it always makes sense to sell something you think that's going to go down. And you can immediately feel that momentum when you enter or exit a trade. And so when I don't even see like entries and exits being talked again, even at like an intraday technical level, it doesn't really make sense. It doesn't even have to be like technical, like charting, like, the open from 9:30 to 10, and it really is right around 10:17. Shout out to Gucci Mane. But right in the morning open, you have more volume, so the momentum's stronger. And so I'm not going to go through like the technicals on certain trades, but you don't even see like that kind of conversation, because it never makes sense. Like even people say, well, I'm investing for the long run. Well, it still doesn't make, if you can go up 12% in like 4 days, you're going to want to do that. Nobody wants to see a red dot on their screen. And so that is what I have for you today. Like I said, I'm about 50 pages into Andy's book. But try to generalize the any sort of like structured logic I can in the actual book report videos. And so that is what I wanted to cover for momentum and the trades that I'm currently having. And again, my constitutional rights are violated. I do not have the ability, right? I live in a country, the United States of America, 250 years of declared independence. for no taxation without representation. And I can't function in this society. That is still my overarching point of anything that I produce in videos is I'm the victim of crime. It is my right to my writings and my discoveries. It is my right to just compensation for private property distributed for public use. I literally can't turn on the TV without people who I've documented myself right here, and it's in my desk. I don't want to take it out. But I have a whole 5 terabytes of just news clips of people directly referencing me. Pay me something so I can actually live a life. But that is what I have for you today. Thank you for watching, and I'll see you on the next one.